with the creep police department. And then that thing came out on HBO or whatever. We were live, man. And they got me because the sticker's still on my door.
I'm gonna give these people money.
Scams. How to stay safe out in this world?
Love it.
Things that you don't want to do. Subscribe to the Fraternal Order of Police.
Subscribe. I got scammed. I'm a victim.
Have you? I know, Adam. You watched that the HBO special.
Oh,
Tony,
so
have you
good.
seen this HBO special?
No. We were telling people about this for years.
If this guy was a cold caller for any of our operations, our business would explode.
He needs to be a debt collector. That guy with the real deep voice.
It's not he, dude. It's like 100 of them that were all like felony, like doing drugs in the call centers.
They were nodding off. They're doing heroin like at their desk.
And they're like talking these guys into donating like their last $5,000 to the Fraternal Order of Baltimore Police.
Right, and it's so close. Whatever they say is so close. They're not actually
correct.
Lying to you, but that's awesome.
Oh, which is a great lead into the so close thing. So we're rocking the defund the HOAs today,
which is ironic.
Yeah, Adam, he probably can't have this episode really get published too much, or he's just trying to trim up the budget over there in his neighborhood. But Adam, obviously, you live in a neighborhood with an HOA. I live in a neighborhood with an HOA. Tony lives in a neighborhood with an HOA. We're gonna go HOA like subdivisions, PUDs, all that other stuff. We'll deep dive into those. Today, we want to talk specifically about condos and the association that has to do with, how these things are warrantable, non-warrantable, why certain projects or certain areas always remain cheap or perceived to be cheap. Obviously, we've had Tony Medero on a bunch of different times, agent at EXP, but previous life, Mortgage World, Harris Bank, and was actually on part of their condo review and their condo legal team from many years ago.
Yep, we had a great legal team that handled just this because it makes such a big impact on the value of the property and quality of life. So, banks placing, as you well know, placing a lien on a property, the bank has generally more exposure than the owner. So banks really need to understand an HOA that they're financing it, right? Which is why we're talking about this.
I think if we're going to break it down to a consumer that's looking to buy a condo right now, there's two worlds, or there's two lanes, okay? You have warrantable and non-warrantable, which really doesn't mean like a warranty in terms of, hey, this thing's going to hold value or anything, but it has to do with the way a bank or a lender is going to review the condo association's budgets, declarations, bylaws, any other type of control that they're going to have over that unit. And the goal is to protect you because you're buying, for lack of a better term, a cookie cutter and a cookie cutter operation, right? The values are going to be, it's a 2-bedroom, 1-bath. There's not much special updating you can do in a condo, right, Tony? Maybe.
God, I hate my tenants.
Yeah, we'll go through that later. But when you're looking at condos, there's the warrantable versus non-warrantable. And I think what a lot of times you'll see as an agent, we hear as a lender is, oh, I like this one because it looks affordable or the perception's affordable. Likely it's a non-warrantable condo. And Adam, we'll talk about some of the things that HOAs need to do for insurance coverage.
What's non-warrantable mean?
So non-warrantable means that we cannot sell that mortgage to Fannie Mae or Freddie Mac.
Oh, you got a portfolio.
Yes.
Yikes.
And
which is such a small portion of the mortgage business.
Yeah.
You might as well consider that thing next to close to cash.
I pulled the data for our company, right? Novus probably does about $2 billion in originations annually.
Oh my God.
Last year we closed 40 non-warrantable condo deals.
Nobody wants to hold a loan. There's just far better things that you could do with the cash.
Correct. So when you see this perception and you see this cycle of like particular areas like Flossmoor along 80 there, east of 57, like there's this batch of condos that you could probably acquire for under $150,000. Would you agree?
Yeah, as a matter of fact, I have a perfect example in Homewood that I give to people. I'll speak on it in a minute. How losing warrantability and a lack of reserves is the fastest thing I've ever seen affect value. It creates a super high amount of volatility, more than anything I've ever seen. During the recession, I was working for some municipalities, large asset management firms, and receivers. And one of the things that they had me doing was evaluating for the receivers and for the highest and best use of things, some of these condo and townhome developments that had seen, we had one in Homewood with 90% depreciation in 60 days. All right.
For the value of the home?
For the value of the condos. Yes. All right. So this is when we talk about warrantability, and we might as well just get into it. And you can talk about reserves. So to make an association able to qualify to be sold to Fannie Mae, Freddie Mac, or Ginnie Mae, even that's the FHA. Okay, that's a little bit tighter even. All right. We're going to look at things like what are the reserves. All right. There's costs to that association. Yeah. We've got a plan for a roof. We've got common area maintenance. We have an insurance policy. Okay.
Who audits all that?
The lender.
Well, lenders do, but themselves, there's really no oversight. Okay. Wow. Which is why what you're buying into in an HOA like this makes such a big difference. And why I argue that the Realtors Association ought to require maintaining a copy of the budget, the most recent annual budget, and the most recent quarterly financial statement prior to allowing one of these properties to be listed. All right. Because what budget we're looking for, like a certain amount of reserves.
Typically 10% of the revenue they want to go to deferred maintenance and capital improvements.
I've been a part of I'm currently three associations. None of them have the correct reserves. None of them. And they're ran by a volunteer workforce. Like
this was actually part of, at the time, Harris's outreach program, because people didn't know.
Yeah.
And they for free would kind of give you some assistance. Here's what you should have.
Yeah.
And then there's others that have actually voided the terms of their covenants in their governing documents by having too much. For instance, there's one in Orland Park. And I don't think anybody would complain about this, but last I checked, their reserves were actually 2 times what their annual budget is. They were so strong they could stop collecting.
What are they doing?
They're running like a business.
They could stop collecting the assessment for 2 years and still pay all the bills.
Wow.
Okay,
that's great. I'd rather have that.
So all right. So to be financed, right? So we have to have a budget. We have to know about what we're going to spend. That's what this we're supposed to be having an annual planning process.
Yep.
How much is it going to cost us to do all this maintenance, all these things? That's our budget. All right. Then we want our reserves, the amount of capital and cash that we're hanging on to on hand, to be a minimum of 10% of that. I like to see 15%. I don't know where you're at. I think 15 to 20% is very safe.
I agree.
15% of the annual budget, is that what you're saying?
Yeah. So if the budget's $100,000, they want to see $10,000
in a checking account.
No.
Or like
so
actual
a line item on the budget.
Yeah.
So, 10,000 going into that account. Now there's some rules that govern reserves and like the balance in there, but everything is more expensive. And I think that's one thing that, we set these budgets and set these timelines up. In the last 4 years, we've seen the cost of everything explode, right?
So this is actually the second component of what I want to look for as your agent, which can be very hard for me to get from the agents because realtors don't require this. But I want to see the budget, but I also want to see the most recent financial statement, because what we have here is a budget is saying at the beginning of the year, this is how we expect things to go. And then the most recent financial statement will tell us whether we are on track or not. And the nice thing about having 15 or 20% is we have some unforeseen expenses, some unforeseen increases. The lawn care company just quit the contract. We have to hire another guy and they're more expensive. We don't want to eat into the homeowners for that. Let's reassess next year, but we've got this buffer here where we can pay for this.
Yep.
All right. So as long as I'm there, I do want to go back to the volatility and what created that 90% depreciation, because this is very important.
Yeah, that's interesting.
What was it? When you think the place looks like a deal. All right. So we have the finances of the association. This is one component of it. Then we also have the governing docs of them. Depending upon what is said here and what goes on here, the two can create a perfect storm. What is a perfect storm? When we see some economic volatility, like kind of what we're seeing right now, we've recognized through our analysis, this was through both when I was consulting for JP Morgan Chase and Bank of America on their residential debt, we learned people are much more prone. The first thing people will default on is their homeowners association.
Makes sense.
They won't default on their car.
Yeah.
Car comes number 2, and then their house. Sometimes these two are up for grabs. But the HOA, people think, to hell with the association, all right? So they default on that first. Now, in a period of great economic uncertainty, what happens is that has a tendency to spread like wildfire through either a lower income community or a low moderate income community, okay? So people stop paying. So what happens is we deplete the reserves, all right? Now, warrantability comes into question, all right? And maybe there's a lender that will still write in there, they'll portfolio a product. It's kind of tough to get a loan, but maybe you can still get one. All right. The next shoe to drop involves you guys is what will just absolutely destroy the thing is when, well, actually, no. Second to that is we say in our HOA docs, you cannot rent your property, which a lot of people think is a great thing. I don't want renters. Well, if a guy is in financial dire straits, it might be nice for him to be able to rent his property out to get somebody in there who can pay.
Yeah,
he can live with his aunt and uncle, get somebody in there. But now they say no. All right. So now what happens is we have a strategic default. The guy says, well, I'm not going to be able to pay this, and just quit paying the mortgage too. So now we've got a foreclosure going on, and we have the HOA not paying.
Yeah.
And this has a tendency to spread through the development. Okay. One guy does it. The next guy hears about him. He does the same thing. The final shoe to drop that will create this unbelievable rate of depreciation is when you no longer have sufficient reserves to be able to obtain a master insurance policy.
We're going to come back to that too.
When you lose the master insurance policy, every purchase in there must be cash. Nobody's going to purchase it. The thing that really caused the 90% depreciation here was we say, okay, every purchaser in here must be cash and must be an owner occupant because you can't rent the place. Okay. Yeah. So take a place like off of Ridge Road in Halstead in Homewood. This is not the greatest neighborhood, not the greatest. It's not terrible, but it's not the greatest. So now you have to say, how much cash on hand do you think the average guy who'd be willing to live there as his home would have?
And then it just goes
maybe 7,000. So this is where we go from 120,000 to $7,000 worth overnight.
You figure what 80 to 85% of transactions close with financing. So now you're down to a 20% buyer pool, and how many owner occupants are paying cash? Maybe 5% of that. So you've eliminated almost all of the demand at this point.
You can almost swoop in there and buy the whole condo association and just flip it.
Well, that's what a lot of people do.
So the way to do it during the recession, as a matter of fact, was wait for one to completely obliterate itself. All right. You come in and broker a deal with the court. You buy the whole thing. All right. And you do we had never seen this actually up until the recession because it always went the other way around. A condo deconversion.
Yeah.
Okay. There's a lot of apartment buildings that exist today due to condo deconversion from during the recession where that company bought it up, got the court in to say, everybody, here's what you have to do.
So what do they turn into rentals? Like it's just an
apartment
building?
So then we turn it into an apartment complex.
So back to the insurance thing, you're going to start seeing this so much, even with correctly funded HOAs, because people are having a real hard time getting condo associations to be even underwritten by any company. It's coming hard, guys. Like,
well, a large part is, as you actually mentioned, I was actually super bright to think of that. There is very little to no regulation, and I'm not arguing for regulation. Frankly, I disagree with a lot of what the banks do, but I did think Harris Bank's program where they had like a legal team and financial people who would come in for free. The banks do all this stuff in the community. I think most of it's a waste of money. If they wanted to do something that was really of value to the community and to society as a whole, they would engage and offer free services to homeowners associations to let them know what they have to do. They're busy sending people to the Chamber of Commerce dinner or the golf outing, pissing money away. Send that guy to meet with the homeowners association, bring them dinner, and show them what they need to do to have their books straight.
What blows my mind is how much power these associations have. Like, they can literally, in their bylaws, you miss a couple monthly or annual payments, take your house. They can foreclose on your house.
Absolutely.
Insane.
One of the things, we're in Northwest Indiana, and this is the case. Northwest Indiana is pretty free.
Free.
compared to other places.
Freedom!
It's true. But, when you go to develop, and I know this, I've met with Lake County and pretty much all the municipalities. You want to develop a subdivision or something, they're going to look for you to require it to be a part of an HOA, which is absurd. And I've had this conversation with them, and they legitimately haven't thought of this. So look, I understand the reason they want it is they want to keep things looking nice and uniform and all of that. You can actually accomplish that with the covenants for the subdivision, and you don't need an HOA. The reason the HOA becomes a problem is we don't have this regulation here, right? In Illinois or Indiana, the states that we do business in most. However, in Illinois, there are attorneys that are competent in HOA law and will engage. Here we have Jonathan Peterson in Munster, who's pretty good, but there's not like a plethora of them.
So what you're saying is if there's no HOA, there's just covenants, then the lawyers have to
No. So if there's a HOA, the HOAs eventually fall apart. I feel like it's about a 7-year time span of a new subdivision once it's been turned over to the homeowners, that somebody got this wrong, and then this guy got this wrong as well. It was never fixed, and then this was never fixed. And then we get to the point 8 years out where there were so many things that have been being done wrong or not enforced
that it's invalid,
that everybody says, okay. Whereas somewhere along the way, at least in Illinois, there's numerous attorneys that you can go to relatively cheaply as an HOA, and you should seek them out and say, hey, how do we straighten this out? And they'll help you straighten it out. Here, you'll find a guy and he'll be like, well, $25,000, I'd be happy to get started for you. And then they don't really have enough experience at it. So, anyways, back to the subject. In my opinion, though, that was great. Though. As a matter of fact, I'm going to talk to some banks about that and engage with these HOAs, because go ahead more about financing.
Well, it's a pretty simple formula on like what a lender's going to look at for warrantability. Fannie Mae and Freddie Mac publish guidelines. We at Novus have a condo person who's actually based in Chicago. She'll walk through associations and try to guide them there. But we have this other weird power dynamic with HOA management companies, which are the extortionists. Like
Erickson.
There's a couple. Like there's one.
First American.
Yeah. They're like.
It always seems to be like 50-year-old ladies, like just sitting in some like shopping mall somewhere. Well, they're just like driving the hammer down. Like,
and they all use this website, HomeWise Docs.
Yeah.
Like we hear about the other couple months ago. The president's going after these junk fees in real estate transactions.
Go after that.
HomeWise Docs,
$95 for a PDF.
Exactly, for documents that should be readily available because it determines the warrantability, the financeability, the value of that association.
Where does that money go? Right to
the management
company.
Yeah, who's
being paid to do it anyways?
Yeah, HomeWise is just hosting it. Like
angry.
They're the Illinois toll. They're $2.94. They're just toll booth Willie.
Yeah,
$1. The state charges $1.95. But like it's what happens there is it creates this strange dynamic for a buyer, right? Who's looking for something affordable. Now you're $500 to $1,000 into HOA docs. $500, $600 into an appraisal, and you don't even know like what could possibly happen. And then you have this management company.
Because once you pay that, it's over. You're not getting that back.
Correct. There's no refunds on that, which leads to the next piece, right? So we're talking.
So pause.
Yep.
So when you do buy in an HOA, you're required by law, they must review these documents. It's in your contract for you to be able to close. So you're going to receive them. People always read them once, and then I don't know what they do. It's always an email that they can never find again. Store that document.
Favorite.
All right. When you're closing with us, we will use that All right. And we will actually say, we have these, Mr. Buyer, all right, buyer's attorney, you're welcome to check with the recorders to see if anything was recorded in addition to this. If you want a current copy that was ordered, you pay for it. We have the ability to see if anything new was recorded, all right? And we have what was current when we purchased the place. So hang on to that. Save you $400 or $500.
Big time.
Yeah.
Okay.
So the first thing a lender's looking at is the budget and the reserves, right? So we talked about that. The next piece of the puzzle is the master policy, the right types of coverages, right?
Yeah.
Adam just talked about that. And then the whole episode came up via conversation with him and I about a HOA management company refusing to have the right fidelity bond coverage, which is basically if a HOA person dips into
steals money out of cookie jar.
Yeah, and like Fannie Mae and Freddie Mac's normal guidance on that is 3 months of the aggregate reserve, 3 months of the aggregate assessments.
Yeah, that makes sense.
So the difference in this case was having $50,000 worth of coverage versus $40,000 worth of coverage. You insure HOAs multiple times. I think we figured out the cost difference.
No premium, basically.
$20 a year, maybe for that. But that's the difference between that customer now. So that buyer now has to put at least 10% down on this transaction and gets less than favorable financing terms.
Because of that.
Correct. And that's something we don't.
Aggravating.
And we had to pay.
And this is one of the reasons why that price was appealing of that place.
Oh, correct. This is the
less buyers, because a lot of buyers would say no.
They'll be like, no, I don't want to mess with that.
So when we have buyers saying no, the few that say yes get to dictate the terms, which usually involves price.
Yeah.
This was a $155,000 condo in an area where everything's $225,000 plus.
Mm-hmm.
There's a reason why it's half price, right?
You can't trick the real estate market.
You can try. You can string it along as long as
But
possible.
I want a deal, Tony. I want a deal.
And that's the
Not
problem.
your agent.
So we review the insurance, and then it turns into this again, the gatekeeper of having to pay a company to give us an HOA policy when that should be listed in the MLS.
Yeah.
If you want to sell a condo efficiently, your seller, right? You guys have owned condos before. You receive a copy of the budget. You receive a copy of the master policy.
Yeah.
You can provide those to your agent who can then provide them to prospective buyers. But I guess if you're hiding something, you don't want to show it.
It's criminal. It is criminal that the Realtors Association does not require a copy of the budget, a copy of the most recent financial statement as a minimum. All right. In my opinion, they should also require a copy of the section 22.1, which is a disclosure used in Illinois that is referred to as the condo questionnaire.
Yeah.
It's a series of questions that the lenders submit to the HOA leadership board that they must complete, asking about things like special assessments. We'll talk about that in a second.
Oof.
Pending special assessments.
Yeah.
And here's the kicker. Contemplated assessments. Contemplated means we're talking about it.
It's
we're
been brought up.
Came up in the minutes.
Yeah.
You have to disclose these things. All right. So now I say that this information is as important, has as much impact on the value of a property as bedrooms and bathrooms. And you absolutely you cannot tell me that it doesn't, because I personally evaluated a place that had 90% depreciation in 60 days because of these documents. So why the Realtors Association does not require these to be able to put one of these listings into the MLS boggles my mind.
They have to wait all the way until the lender asks for it?
No, you asked the agent about it. Here's how this goes. I faced this for years now since I've started selling and wasn't managing a company or writing mortgages. And they said, well, the contract says that they can get it. I said, well, why would I wrap my guy up in this?
Yeah.
Okay. And that's on damn near every single one. I am myself, Tyler, and Eric on our team are the only agents I've met that will not put one in the MLS unless we have this information. We're the only ones.
That's insane to me. Because there's a million scenarios where there could be something lurking. Like the association I was first a part of in Payless, on the Platte survey, It said private streets.
Oh boy.
Oh, so dude, the association in the future was on the hook for maintaining the streets, which is an
Plowing the
insane
snow.
amount of money.
Plowing the snow on
Absolutely.
top of that, everything.
Absolutely. They wanted to gate my subdivision. That was my number one thing, was the cost of what the streets are going to be.
Mm-hmm.
Sewer, like utility line. It could be the roofs, like elevators.
The reason I bring this up, though, I'm personally in disbelief at how few agents ask for this information for their buyer clients. All right. And I feel it's a dereliction of our fiduciary responsibility to the client to not ask for it. Now, what I've had to resort to because of the way that our industry works is oftentimes I will reach a stage in which I'll tell a person, Tony, this is not the right way to do it.
Yeah.
But if you want to move forward, this is what we're going to have to do.
Yeah.
I have to tell you this so my conscience is clear.
It's almost like, and I'm from the outside looking in, right? It's almost like the agents are just like, there's some risk possibly underneath this pile, but that's going to be a lot of work. I'm just going to let that slide.
Well, the Realtors Association, for the most part, because you as a buyer, you want to have a fun experience. You want to make it easy.
Yeah.
All right. And a lot of people, you have your stuff together more than a lot of people. As soon as things become any level of detail whatsoever, they shy off, get gun shy, they'll run away from it.
I'm confused.
Too much work. So in my world, I'll get a guy who that's too much work, just hop to another agent. It was nice and easy. And I'm like, man, it was easy because you didn't run into any problems.
Because you could have stepped on a landmine and lost your foot.
You'd be thousands of dollars into something for it to implode.
So are we seeing financial health of associations suffer right now?
Oh, it is. So what we're seeing, right, is we're not seeing appropriate amounts for the 10% reserve. That's a big problem.
Yeah.
So then the next thing is how do we get the budget back in line? Let's cut insurance coverages.
Yeah.
Well, insurance, it costs more, right? The expectation on master policies for lenders and warrantability is replacement cost coverage. We've had 3 episodes in a row about replacement cost coverage, insurance premiums, roofs.
It's not just that; it's everything the association deals with. The costs are going up, and then you're on the board, and you're like, "Oh, we need more reserves." Well, what do you got to do? You got to raise the assessments, and who's in favor of that? Absolutely nobody. So now you're the bad guy. That's like, "Oh, you guys were paying $200 a month. We got to go to $400." They can't afford it, and then the spiral happens.
Well, so this is how that works, right? And we just started talking about the special assessment. So it goes, okay, bam, we can't afford that. Let's just burn the candle until our fingers are on fire and then go special assessment. Yeah. We're talking about a special assessment. Special assessments are the biggest mother trucker in warrantability situations now because it becomes, why is there a special assessment?
Right.
Is there a bigger problem?
Correct. They don't want to answer. The association doesn't want to answer, doesn't want to be transparent.
Yep.
Yeah.
And an underwriter and lender sees this, and they're like, "Well, they don't want to answer. They don't want to be transparent."
Had one a couple of weeks ago in Bronzeville. Hey, what's the specialist? We don't know if there's a special. It's right here in the minutes. You guys talked about it 3 weeks ago.
Yeah.
Right. Want to know what it was for?
Tuck point in the building.
The boilers.
Oh.
Were completely decrepit. They were about to stop work. So when we see special assessment, it goes, okay, what's it for? To refund capital after roofs are put on. Perfect. No problem. It's for replacement of boilers. Well, guess what we have to ask for? Fannie Mae and Freddie Mac require this now because of everything that's happened in Florida. We now have to ask for the report that led to this.
Oh.
Well, guess what? All of the boilers in the condo association are going out. So now you have a building in Chicago with no heat.
And no one sells boilers anymore.
Hence 90% depreciation.
Yeah.
That is the literal 1-2. The Mike Tyson 1-2 knockout, your value's down 90%. And this is why it's critical to work with an agent. Like, we can't stress this shit enough.
They'll keep saying it.
Work with an agent.
Is anyone listening?
Yeah, no one watches anyways.
This is going to be a share, though. I'm sharing this episode. This is high value for people. We ramble on about a lot of shit in the past. This is high value stuff that people aren't talking about. That as inflation, what we're seeing really right now is the months on the ripple effect of inflation that was realized 24 months ago. You know, during COVID, we saw things with builders, for instance. I saw a lot of this where they went to homeowners, people under contract to build a new house and said, yes, I know that the contract says this, and I also know that there's no way for me to increase the fees in here, but I have to increase this is what it costs. You can either pay it or you can sue me or not, whatever.
Yeah.
I don't care. I have to do it. So associations saw this with landscaping companies. The guy who does the annual this maintenance, that maintenance, the next.
Oh, and God forbid you have a pond in your neighborhood.
Oh,
Some of us. Oh, I guess I got one now.
to water feature or not.
Oh. Weed control. What? $15,000 a year for weed control?
Yeah. So this is what we're seeing. So now more tan ever, if we're contemplating something in an association, we have to get these things. If I could talk to the realtor community, agents, please, really broker owners, managing brokers, have these conversations with your agents. I know that you're not, and I know that you don't think about these things. I've met 9 million of you.
Yeah.
Okay. You were my competitors. You were guys I was trying to take over. I know you don't think about this stuff and you're just working with this agent. It's like trying to herd a house cat. Okay. But you're going to have problems. Your agents are going to have problems if we're not talking about these things on the front end.
And because the customer, the client doesn't think of that. Like they just see this house in this beautiful neighborhood. What percentage of Northwest Indiana's associations? It's got to be like 90.
Everything is
anything that's new, it's pretty much required, which is please, and anybody who's seeing this who has any relationship to government, you can accomplish what your objectives are, which are so that things are built in a certain type, look a certain way. Neighborhoods have certain types of lights. You can accomplish these things with the covenants that are recorded for the development, and you don't have to put an association in place.
But who enforces that, Tony? So if there's no association, there's just covenants.
The building permit.
The permit people have.
Yes, you got to get a
Now
building, permit, and that
The town
applies.
doesn't want that, bro.
So that applies, but they have to. Okay, so this is a basic function of an inspectional department of a town. All right, what are our building codes? So a town has codes.
Yeah.
You've got town codes. Okay,
You've
got
subdivision codes.
Yeah, you've got county codes, and then if you're incorporated, like most places, well, if you're incorporated, you're a town. All right, so the town has their own building inspector. That guy has to go off of the town codes, and then if there's various developments have their own covenants, he has to go off of those. All right, and we have to get, you have to get a permit for everything. For instance, you're going to put a street light in. You can't just start putting street lights in, right?
Yeah.
You or I can't call and be like, hey, there's one over here on 41. I'd like to buy a new street pole there. Right?
You can. It just might not go.
Well, I've seen you guys advertise. You guys don't own those ones with the banners on them?
Well, so it goes. Can you still see one?
Can you adopt them?
If anybody from St. John's Chamber of Commerce is watching, I got you.
Where'd that money go?
I got you. But no, so really, so they have to look at these things anyways.
Yeah.
All right.
Interesting.
So it's town loves it. It's a way to offset. These we have some land up here that is. They want this nice sign and thing like that. Well, you got to take care of it. Well, maybe we don't need a big sign. We don't need common area. There's a lot of communities that it's just a series of lots.
Get rid of common areas. Why do we need a sign? Who cares what your neighborhood is? I don't care what neighborhood. Oh, I live in the gates of St.
Oh my God. As a realtor,
up.
dude. So you know what's funny is like, I thought it was just because I was like a mortgage guy and I don't think of this stuff. Well, that's not like 15 years ago, more than 15 years ago. Okay. And like all these realtors, like they all know the neighborhood and they talk, you get together.
Willow Ridge.
Such and such neighborhood. And I tell them all the time, I'm like, I don't know neighborhoods. I don't know neighborhoods.
Sorry.
You know what? I figured that neighborhood out. If I'm working in it, I can see what the values are. I can research all of that. This is out of my mind the next second.
Yeah.
I'll tell you what, out of all three of our neighborhoods, your neighborhood does have the best sign.
Well, we don't have one. And
whatever that is.
Well, that's over. So just talk about how cheap people are, all right? So we have this thing. It looks like the entrance to Chinatown.
I see it every morning.
Into my subdivision. You know where I live, right?
No, I don't know.
Oh, no? So
what isn't it? What's
I'm
something?
I'm right across.
Oh,
from
the Renaissance.
Yeah, I'm right. That one sounds real expensive.
That sounds great.
Yeah.
You can only drive
So,
through Saturday.
I'm right across the street from the preserves on the White Oak.
Oh, yeah.
Anyways, the entrance, it's this big wooden structure that looks like the entrance to Chinatown. And when Schilling was building it, okay, he wanted it to be, very regal and beautiful. And he was in California, I forget, long enough, and it doesn't matter. Super high-end development. And he copied it, all right? He took a picture of this thing, they had it specially designed. And he spent something like $350,000 just on the wood part of it. All right, this is like 20 years ago. So, anyways, this association's in falling apart. They never sealed it and painted it, okay?
God.
And this thing is complex, and it's got wings on it and all of this, and it's super high.
It's falling over.
So I get in there. This is 2015. And they're, hey, Tony, we really like to address this. We want you to help out with it. I'm like, okay. It was falling apart. The work that went into figuring out how it was built, getting people. We had Von Tobel Lumber, the owner, the guy who runs Von Tobel. We had Frank Schilling. We had Dick Schilling. All right. We had a guy from Schilling's Lumber. We had mechanical engineering company and architectural firms all out there at once. All right. So long story short, we figure out saving some money, this, that, and next. We can rebuild this thing for like $180,000.
What?
Yeah.
For an entrance?
To rebuild it, this is dude, come see it. So we get it down to 150. But this is these people, all right, I'll come straight out and say this. Oh man, see, you were the people that can. So I'm far and away probably the brokest guy in my subdivision. I don't know. We have 3 FBI agents or something like that. I don't know.
No,
we
do.
do.
Show with like
I don't know. They can just get their hands on it. They just take your bank account if they want to. So that explains why they're in there. Anyways, I'm like the brokest guy. But it boiled down to, it was like a one-time cost, like $2,000. All right, it came out to $2,000
per household,
$2,500 per house, and we can have brand new. Now, my neighbors, my neighbor on both sides of me, they'll take people out to dinner and the bill will be $5,000 and they cover it.
Yeah.
Okay. One dinner, $5,000, no problem. Fix the front entrance to your subdivision that you drive through 3 times a day. You have to see every day of your life that you're living in St. John.
Yeah.
Oh, it's too much.
Wow, share it down.
So what we did, we found a bullshit fix, man. Oh my God. It was like we got it down to like $22,000. These people were watching every nickel. We had it rebuilt with parts that were plasticized. We took parts from here, put it on here. Yeah. We had Pangier Corporation come out.
Yeah.
They do the mills.
You got to have Timu.
A special type of paint. The manpower involved with this, if we were to take a look at the people that
I can't wait to drive by this.
If we were to take a look at the people that worked on this and combine their hourly, what they would make hourly, we spent probably $500,000 in time on trying to save
$20,000.
Trying to save, $1,000 a guy. It was just unbelievable. So
defund the HOA.
Well, I mean, that's exactly where we're at with it, right? So this is for an entrance to a subdivision to a single family home. Imagine when this is boilers, roofs,
windows, and a condo mid-rise.
Porches too, like all of
decks.
it.
Is it a limited common element or a common element?
So you want to look at these things. So in HOAs, they're right. I would say look at it at first. Oftentimes, I will say actually a couple of places that you can get this stuff from. If you're purchasing in Indiana and your agent doesn't know what they are doing, which is going to be a fair amount. They can't get it, they can't, whatever. They likely have a relationship with a title company, and most of the title companies in Northwest Indiana are pretty cool about pulling it out of their records so that you can look at these things. Other things we want to look at, right? So the budget and all that stuff is talked about. Fences are a big one. Yeah. Okay, that's going to be covered in there. Signs,
all that.
Flagpoles, pools. Here's a kicker for all you guys with big trucks. In my association, I uncovered there was a weight limit
on your truck
on the plate that you could have, because they didn't know how to write the verbiage to make it. Was really designed. It was supposed to be pointed at commercial vehicles. They didn't want you to have, which is understandable. However, the way that the attorneys wrote it, it had to do with a weight limit on the plates, and that was years ago. Now, the vehicles you can buy, a lot of us are driving things with over 12,000, over 10,000 pound plate so that we don't get in trouble with the state when we're pulling our camper.
Now you can't
or
park
whatever.
at home.
Okay. So now you can't have that thing in your driveway. And you could be like me, before you close, you ask the people on the board and whatever. With me, it was kind of like we just agreed to look the other way on that. And we had to agree to look the other way because we couldn't get an attorney to change it efficiently.
You got to change the bylaws. It means you got to have a vote from everybody in the thing.
Constitutional convention.
I see. Yeah.
Ugh, all right.
That's that's
HOAs. I could do a whole nother episode.
So I think we could wrap it up by saying they have a major impact on value, saleability. All right. And when we're looking to acquire something, I'm not saying they're all bad, right? Because people got to live in them. The type of HOAs that we live in have literally no impact on the financing end of it. It's something you want to look into, though. But when we're talking about a condo or a townhome, think things with shared roofs.
Yeah.
You share a roof with your neighbor. If you share a roof with your neighbor, you want to take a look at it.
Deep.
And there's some that, like I said, there's some that are great. There's one, it's at about 156th in Harlem. It's on the 55th, the west side of the street. This has got to be like the safest association known to man. All right. So they're not always a bad thing.
There's good ones.
And what it comes down to is, again, this whole working with an agent that knows the ins and outs of them, can find the data, convey the data to you, Mr. and Mrs. Consumer, in a way that you understand. Because it's, this isn't warrantable or not, or non-warrantable, right? You don't know what that means. So that's what it really comes down to.
Yeah.
People that know it, people that can explain all of your HOA's coverages, making sure you have the proper walls in coverage. We can talk about that at some other point. All that fun stuff. Tony, anything else? I know you got to get out of here.
I like to go to Bolingbrook.
All right. Woo! Any other things? What's the best way to reach you?
The best way to reach me is you can actually Google my name and mess it up. It's Tony Mitadero, because you're not going to remember.
Is that a D or a T? I don't know.
Exactly. You're not going to remember 708-259-3734, but you will remember Tony Mitadero. Just Google that up. My contact information is there. You can reach me anytime.
We'll see if we get a picture of your the entrance to your subdivision at some point.
I'm going to get that.
Adam is my agent.
Yeah.
You guys holler at me, applywithjr.com. Thanks for tuning in. We'll turn this into something real good at some point.
All right. Have a great day.